Not so long ago, dim sum was just another Chinese delicacy. But the bite-sized morsels have now lent their name to a fast-growing and enormously significant part of the global financial system: Chinese renminbi currency bonds sold outside the country's mainland. These offshore dim sum bonds hardly existed a few years ago. Now the market is growing rapidly as large Western companies, eager to tap the renminbi investor base in Hong Kong, attempt to raise proceeds to fund the businesses in mainland China. Hong Kong is likely to remain the dominant centre for offshore renminbi issuance for the foreseeable future. However, the market's immense potential means that other financial centres are also attracted, not least here in London. London is witnessing an increasing pool of liquidity in the Chinese currency, thanks to the substantial growth in renminbi trade finance and the steady growth in the range of renminbi banking services on offer in the UK. The city's credentials as a nascent hub for renminbi financing received a fillip when in April, HSBC issued the first dim sum bond sold outside China or Hong Kong.
Well, London is in a different time zone from Hong Kong or Singapore or any other Asian city. So again, the London city is well placed. There is infrastructure, there are people, there is already well advanced technology.
If, as expected, Chinese state-owned banks follow HSBC to the London market for dim sum bonds, it will confirm Beijing's approval of the city as an offshore centre for renminbi. Although committed to internationalising and liberalising its currency, China is likely to only take gradual, steady steps, thus slowing London's ascendancy as a renminbi financial centre. Although the amount of Chinese-denominated deposits in London increased to 109 billion renminbi at the end of 2011, that is still dwarfed by the 566 billion deposited in Hong Kong. Nor are other financial centres going to let London establish itself without a fight. Singapore, for one, has also voiced ambition to become an offshore renminbi hub.
This market, when you think of the domestic market, the onshore, is now twice the size of the sterling market. Now, clearly, the offshore market is early days, but it's already like 2 to 3% of the size. We're talking $25 billion last year equivalent, so it's starting to be significant.
But London has several advantages. It's arguably already the financial centre of choice for emerging markets, thanks to its outward-looking ecosystem of lawyers, bankers and investors. It's one of the world's largest foreign currency trading hubs and a trade finance centre to boot.
I think in the first place it's really the choice of the Chinese authorities how quickly they are willing to deregulate and to allow banks to go ahead. I think banks are ready to act quite quickly. But right now London has already a share of more than 1/4 of all the offshore renminbi trading. I think this can grow quite rapidly.
Of the global financial centres, London is arguably at the top table for dim sum bonds. The city clearly has a role to play in this potentially very tasty business. However, it is likely to, in the end, have to settle for a supporting role. This is Robin Wigglesworth, Financial Times in London's Chinatown.